Thank you and good morning, everybody. Caledonia Mining is a Zimbabwe gold producer. We have ramped up production through a series of investments, and we are now into the next phase of the development of Caledonia Mining. We sank a new shaft down to 1,200 meters. That has enabled us to build a new mine underneath the existing mine, and we will ramp up production to 80,000 ounces a year from the current level of about 67 last year, giving us a 15-year life of mine. So the future for Caledonia is very, very exciting. We are a dividend payer and have been a dividend payer since 2012. There's a slide on this, so I won't elaborate much more. The next phase that I alluded to is that we are going into an acquisition and expansion phase, and our goal is to develop new mining operations in Zimbabwe. We pride ourselves in knowing how to operate in the jurisdiction. It is a business-friendly jurisdiction if you do know what you're doing, and we've been doing it since 2006. We have acquired a new property, which has got about 1 million ounces in inferred resources at the moment. That is being upgraded, and we are very close to finalizing the next investment, which will take Caledonia to be what we believe is the next sort of mid-tier gold producer in Africa. I've pretty much run through all of this. We are well funded. We've got, at the end of last year, we had over $16 million in cash. Blanket Mine is highly cash generative, and the investment we made in the central shaft, nearly $70 million, that was all generated in Zimbabwe, and that is the model we follow. Blanket generates cash, we redeploy it into assets of expansion or acquisition, and that will enable us to take us from the future 80,000 ounce production above the 100,000 and then heading towards a sort of a mid-tier level. That is our target. We're a relatively low-cost producer, somewhere between $600 and $700 an ounce cash, and at an all-in sustaining cost level of between $800 and $1,000. That includes, obviously, royalties and all the other components. We listed in New York, we listed in London, and we've most recently listed on the Victoria Falls Stock Exchange. And the reason for doing that is that companies listed on the VFEX are now entitled to retain 100% US dollars on their incremental gold, and that is very important to us. Investors don't understand the mechanism of being paid for gold in Zimbabwe. Although it is at LBMA spot, they can't get their heads around the multi-currency system in Zimbabwe. So being able to access 100% in US dollars just shuts down that conversation. And we're very, very excited about it. It's in operation now. It is working. Our gold revenue flows are better than they ever have been. So we're very, very excited about that. That's just the dividend profile. We went through a phase of increasing the dividend. We increased it over 100% from sort of October 2019. We have plateaued out now at 14 cents a share per quarter. That's because we've got to the final stage of the ramp up to 80,000 ounces, and we are keeping some of the excess cash in the kitty so that we can deploy that onto the Mali Green project that I'll talk about now. We're yielding just below 4%. And we pay our dividend quarterly. The strategy for that is just to remind people that Zimbabwe is alive, kicking and well, and so is Caledonia. All the money that Caledonia pays to its shareholders comes from Zimbabwe. We get it out of the country in US dollars through all the normal channels. So we have to impress upon shareholders that as much as Zimbabwe may sound like a scary jurisdiction, it really isn't. We've invested well, we operate well, and if my technical people were here, they would tell you it's a great place to operate. We take ESG very, very seriously. We've got an extensive slide here, but it is backed up to a much greater extent by our first ESG report that's on our website. The second report will be published in the next couple of months. It's not a fact that we've only just started embarking on the ESG journey. We've been doing this for a long time. Zimbabwe is a poor nation, and relatively we are a very affluent participant in that economy. So we've been doing it for a long time, but we've been doing it sort of under the radar in the local communities. We're now very proud to publish what we're doing, and I haven't got time to go through all of this, but look at the pillars, look at the report, and I'll talk a little bit more about the solar farm that we're building, because that's kind of the flagship. You can't miss a 45-hectare solar farm in the middle of the bush in Zimbabwe. So, we'll talk about that. I've spoken about Central Shaft already. It is going to it's a game changer for the Blanket mine. And I don't need to say anything more about that. Here's a little drone fly past. This is the new shaft, 54-meter high headgear. The shaft, as I said, 6-meter diameter, going down to 1,200 meters. Only the first 60 meters is lined with concrete. The rest is just natural rock. It is very competent rock. It made the project obviously cheaper. We sunk the shaft ourselves, and it did take us 4 years, but as I said, it was internally funded, and that was the philosophy. What you see in the back is the village of Blanket Mine, and this is a world-class operation. We're very proud of it. This is just a schematic of what we call the Blanket Mine looks like. The yellow and the green are old infrastructure. You can see where they are set geographically through the old Blanket ore body. The gray areas are mined out. We need to go into the deeper areas to access the additional resources. The old level was down to 750 meters, and that is what was mined over the last 110 years. We're now going down to 1,200 meters, opening up 3 more levels, and that will give us another 15 years life of mine, as I say. Grades are good. Our Q1 production forecast, we gave the update. We achieved 18,500 ounces at a grade of about 3.8, which is higher than the average run rate we achieved last year. So that just demonstrates that we are able to mine very effectively at the lower levels and achieve some very good grades. The April numbers, production numbers, will be released in the Q1 MD&A, which will be out next week. Look out for that, because that gives you a very good indication as to how we are in achieving our 80,000 ounces. That is our call for 2022. Solar project, 12 megawatt solar project, again funded in Zimbabwe. This is going to only supply just under 30% of Blanket's needs. We haven't got any battery power on this at this point in time, so it is just going to be for daylight usage. Just over 40 hectares of solar panels. We raised money in New York for this on an ATM. We had no difficulty raising money for a Zimbabwean solar farm. We're very, very proud of it. And it's going to be operational in June. We had a few delays with COVID and getting material out of China, but that's all over now. And now the big Meccano set is coming together. Just to put in perspective why Zimbabwe is attractive, that's Burkina Faso, and you can see the greenstone belt of Zimbabwe. It's extensive. And it's been ignored for the last 30 or 40 years because of political and economic reasons. We've not ignored it for the last 10 years. We know where we want to be, and I've already said we've acquired one property, which is the Mali Green property. It's got 1 million ounces in inferred grade. We're upgrading that at the moment, and we bought that for $4 million. There are other projects we're working on at the moment also, which hopefully we'll be able to announce quite soon. This is just a little bit more on Zimbabwe, but I pretty much told you everything about the fact you can do business, you can invest your money, you can get your money out, you can get management fees out, you can get loan repayments out. It is open for business. The outlook is good. We're very positive about the 80,000 ounces this year, and hopefully quite soon the new CEO who's taking over from me, Mark Learmonth, in June, will be able to announce the next acquisition, and that will be a significant game changer for Caledonia. Thank you very much.